Some of you may know me, some may not. I work over here at Future POS Ohio. We had a couple of distributors who all wanted the same thing, to know more about the QuickBooks General Ledger and QuickBooks Payroll interfaces. Figured rather than doing one-on-one trainings that we would all benefit from going through a group training here. Hopefully I will answer any and all questions you might have about the interface. Any questions that you think of throughout the training process, please write down or put into the chat box, and we'll cover after we've gone over each module. By default, as I've mentioned, everybody is on mute. If you need to say something, please send a chat message. I'll be happy to unmute you individually. We just want to reduce background noise as we're going to record this training seminar for others to be able to rewatch and learn at a later time. Okay, so we will get started here. I've got my screen sharing enabled. By default, I've got the QuickBooks open. What we will be using for today's training purposes is QuickBooks Premier Accountant Edition 2008 version. Future POS software can interface with any version of QuickBooks from version 99 up to 2009. As we do want to have the QuickBooks Pro version or higher at all times. You do not want to try to use the free QuickBooks version that's listed on the web or the QuickBooks web version. Both those versions do not support importing of data or exporting of data either, so they are not able to be interfaced with Future POS. To get started here, first thing I want to run you through is just a couple of QuickBooks basics. As soon as we open up our QuickBooks company, by default, it brings us to the Good afternoon, Todd. We're just getting started, just in time. We open up our QuickBooks interface, and by default, it brings us to a home page. On our home page to the right, we have a list of the bank accounts and their balances. As you can see, this is a newly created company. Our account balances are all perfectly zero for today's training purposes. It makes everything clean and easy to work with. All right, so in QuickBooks, what I want to cover is first things first, before we ever get started doing anything or changing anything on a QuickBooks interface, we want to back up the QuickBooks database. To do that, we go to File and choose Save Copy or Backup. I'm going to specify that we want a backup copy of the program. Say Next. We're doing a local backup versus online. Say Next, and I want to save it now. And by default, QuickBooks will prompt us to save it with our company name, Future POS Diner, and the date that we're performing the backup with time. As you can see, these are some previous backups I've done recently. So we'll go ahead and save this one off as 2:07 p.m. And the backup takes approximately 30 to 45 seconds all together here. Restoring is the same process. The reason we want to do the backup is that when doing the interface and creating the import, when we import the Future POS sales lines and media totals, we're bringing in approximately 50 to 100 general ledger entries. So if that import does not go correctly, your options are restore from a backup or manually delete out 50 to 100 journal entries to get back to where you were. So personally, I'm a fan of just restore from the backup. Also, just can't have too many backups. It is strongly recommended that you back up the QuickBooks to a separate physical drive, whether it be a USB hard drive, thumb drive, whatever you're comfortable with there, or even if it is web or FTP upload. Okay, so our backup has completed, and it is going to go ahead and reopen our company. This is prompting just stating that we have more backups than are necessary. Do we want to delete our 3 oldest? For the time being, I'm going to say no. I back everything up multiple times over. All right, so we're back to our home page here. Now, a few things to be comfortable with in QuickBooks regarding the general ledger side of things is I like to work directly from the chart of accounts. We can access that from company here and clicking chart of accounts, or going to our list and going to chart of accounts. A couple of things to touch base on that are just need to be familiar with before we even start working on the interface is how we've configured our QuickBooks. First and foremost, when we are setting up QuickBooks, this is assuming the restaurant has never used QuickBooks before. QuickBooks itself will ask you a series of questions and walk you through the basics of how you want to set your QuickBooks company up, such as is your business hospitality, is your business retail, salon, etc. In this case, I went through the hospitality template. As you can see, the first thing we have here is our bank accounts, First Merit being the local bank here in Northeast Ohio. You could imagine in place of that Wells Fargo or whatever your local bank may be. Under that, I have created sub-bank accounts for each media type that we can collect, such as Visa, MasterCard, Discover. Our cash would actually be available cash in the bank account. Okay, we're going to go more detail on the bank accounts after we've done our first import. Next, I want to make note that we have an account called reconciliation. This is just what it sounds like. This account should always reconcile and balance down to a perfect zero. Our import works on true accounting format that we debit and credit everything we do. So everything must reconcile down to zero in this reconciliation account. I create the account for the exact purpose that if my reconciliation account shows positive or negative a certain number, I should be able to glance at my sales by range and realize, oh, okay, that number is, let's say, for example, sales tax, and so obviously I'm not putting my sales tax in the right place somewhere. Aside from that, a lot of these accounts are created by the QuickBooks template company, such as food inventory, accumulated depreciation for things such as the point-of-sale system, furniture equipment, security deposits, that type of stuff is all created from the template that QuickBooks creates. We do need the gift certificates sold current liability account. When you sell a gift certificate, that is not truly a sale. That is an outstanding liability to the business when you're looking at it from an accounting standpoint. At any given time, that gift certificate could be redeemed, so therefore it is an outstanding liability. And that's why we create it as a current liability account. We also have house accounts, which are the same way. That is a current liability, as that we have not yet been paid for those services rendered. We also have payroll liabilities that we'll touch on later on in payroll. We have our sales tax account for taxes payable to the state or local tax agencies. Aside from that, we're going to skip our owner's draw, owner's equity, once again, all created by QuickBooks. The next ones we want to focus on would be our sales accounts. Let me go ahead and get this out of our way here. Our sales accounts, you notice we've got a major account called sales, and then I like to break my QuickBooks accounts down by bar, food, and retail. You could make these sales accounts match identical to Future POS and have a account for every single department that Future POS has. But personal opinion, that would be a bit excessive. Future POS has the detailed reporting. QuickBooks just needs to know what sales were bar, what sales were food, so that we can build an accurate profit and loss statement. Aside from that, we have fields such as merchant account fees for the merchant credit card processing costs, cash overages and shortages, if we're doing any sort of due rounding or the drawer literally was over or short and we're going to write it off, that type of thing. And then, once again, more miscellaneous expense accounts and that type of stuff. Personally, I like the one QuickBooks created called Ask My Accountant. That never hurts to have one of those in there. Okay, so what I want to touch base on is how we get these accounts in here. By default, QuickBooks created most of the accounts for us. The bank accounts, however, and the sales accounts, we created on our own. And you must create your accounts in QuickBooks before you do the Future POS imports. The reason for this is if you import into QuickBooks without creating the accounts first, QuickBooks does not know what type of account you want that to be. So your sales come in, and your sales numbers will come in accurately, but they don't come in as a sales income account. They will come in as a bank account, just the very first type of account that QuickBooks recognizes. Therefore, then your profit and loss statement shows no profit or loss because you just are showing bank transactions, not actual income. So what we do is we right-click anywhere in the chart of accounts, specify new, that we want an income account, and then I can create the account name such as miscellaneous sales. I do like to make sub-accounts of the major account, so I make one major account called sales to group all my sales as, and then make sub-accounts called miscellaneous sales or bar sales, food sales, and retail sales. Think of it as your departments in the sales by range report and then your major group that drops them all together here. All right, for the time being, I'm going to cancel out of this one. The other thing that we need to do is in our sales tax payable requires there to be a vendor that you're going to pay the sales tax to. So what we want to do is under our vendor center, we'll go under vendor center here, and bear with me as it opens up. All right, there we go. Now I've already got our vendor created for our transaction today. I just called it Ohio for Ohio sales tax. We could title this State of Ohio Treasurer or whatever title you're comfortable with. To create a new vendor, it's pretty much the same as the future POS vendor maintenance. A glorified Rolodex. You give your vendor the name, put in any extra information that you would like to have, and click your OK button, and you have your vendor. Just need to create the vendor as that's who you're paying the sales tax out to. All right, so we create our vendor. We create our chart of accounts that QuickBooks is going to use. If the customer has already been using QuickBooks in the past and you're simply interfacing Future POS to their existing QuickBooks setup, then they have all this already created. You just need the chart of accounts in front of you to match the Future POS. All right, now we've got QuickBooks backed up. We've looked at our accounts and got them configured the way we want. At this point, I can go ahead and minimize this. Let me go ahead and just check, make sure there's no questions so far. So let me go ahead and open up the QuickBooks General Ledger. Anytime I have a QuickBooks interface, I like to put the General Ledger shortcut right on the desktop for the end users. If you want to do that, it's as simple as going under the Future POS 4.0 directory. So we go to My Computer, we go to Local Disk, we go into Future POS 4.0, bin directory, and go down to our QBGL and QB Pay. That's QuickBooks General Ledger and QuickBooks Payroll. You can right-click and just drag it over and tell it to create shortcut here, or you can right-click on it and tell it send to and desktop. Whatever way is more comfortable for you. I just like to put shortcuts right on the desktop. If we're not going to use the desktop shortcuts, we go under the back office, and bear with me as I log in, and wait for the demo mode. Okay, we go to Interfaces, and we're going to use the General Ledger and QuickBooks General Ledger interface. Okay, now at this point I want to mention that I have pre-configured this interface so that we don't have to sit here for today's training purposes and manually type all these fields in one by one, but we're going to go over what these mean and why they're there. First and foremost, QuickBooks General Ledger interface, you export your sales data one day at a time. You cannot take a week, you cannot take a month's worth of data and send it all out at once. You do it day by day. So you're going to choose the date that you'd like to export. Also an export directory to send the file that it's going to create to. What I prefer to do is I always create a custom directory and I call it, for example, QuickBooks Exports. So what I've done is just on my C drive here, I have a folder called QB Exports. Inside that folder, you can see I already have General Ledger exports from this morning's example and training. And also this is where I've been backing up my QuickBooks files. Normally, like I said, you want to back QuickBooks up to a secondary hard drive, external drive, offsite, somewhere else. I'm going to go ahead and just delete these previous General Ledger entries and exports so that we're starting clean. Okay, so that data has been deleted. I am going to go ahead and hide that for a moment. Our very next checkbox, use QuickBooks XML Direct Connection. That feature is used for if QuickBooks is to be installed on the same machine as Future POS. If our QuickBooks is going to be on the same computer as Future POS, we can have the data come right out of Future and drop right into QuickBooks all in one simple step of clicking the OK button down here. On the other hand, if QuickBooks is stored on a separate machine or even a separate location where we're going to have to create the file and email it off, then we do not enable the XML connection. The advantages of the XML connection is one, direct import. It's very simple, straightforward to do. The process can be automated as well. We'll go over that in a little bit later. The other thing to make note of is in versions 2008 and 2009 of QuickBooks, Intuit has added what they call the accountant's copy. What this means is that up until 2008, 2009, when a restaurant needed their accountant to look over their QuickBooks and do the adjustments and the taxes and everything else, the customer, the restaurant, would literally do a backup of their QuickBooks, email it or send it over to the accountant. And while the accountant has that copy of the database, the restaurant cannot do anything with their QuickBooks because then they end up with separate databases. The accountant's making changes on one database and the restaurant's making changes on another. So up until this point, it was pretty much stopping business, or at least stopping journal entries, while your accountant had the database. Only in 2008, 2009 QuickBooks, they have added the accountant's copy of QuickBooks. What this allows the restaurant to do is to export a copy of their QuickBooks data and send that over to the accountant. Then the restaurant can continue to go ahead and make their day-to-day journal entries, cut checks, everything else they need to do. The accountant can make his changes, and then those sets of changes will merge and synchronize automatically. So that's a really cool feature of QuickBooks that you'd want to recommend when you're setting up the QuickBooks interface. Recommend the accountant to be sure that they're going to use the accountant copy and be on version 2008 or 9 to have that copy. Moving forward from here, we're going to do our first interface without the XML direct connection here. This would be as if QuickBooks was not installed on this machine. Okay, so we're not check marking our XML. Now, as you see below, we have all the tabs and all of the settings to fill in throughout here. What we're going to do is, working from the sales by range, we're simply specifying what we need to debit and what we need to credit accordingly to make the interface balance. So what we want to do here is we're enabling a checkbox to the left-hand side specifying that each of these sales departments will be exported to the QuickBooks interface. And we want to export every single sales department that's on our sales by range reports. Okay. We go to our debit account and specify which account should be debited when we do the export and which account should be credited. So for example, with appetizer sales, we're specifying that we want to debit the reconciliation and credit the food sales account. Okay, so food sales is being credited here. Now the way that the link works is the system sees that sales:food links to sales:food sales here. What we're doing is by putting the colon in here, we're specifying that the sales word is the major account and food sales is the sub-account of just generic sales. So our colon specifies that everything that what's to the left here is the major account and what's to the right is the sub-accounts. Okay, going on through the next example, Bev Beer, we specify goes to bar sales. So we continue right down through these settings step by step here, doing the same procedure for each department, specifying where we need to send our sales off to, making sure obviously to get retail into the retail departments. Okay, that is the top part of the sales by range. We're taking the net column of each of those departments and specifying where we're putting our medias, or our monies for those sales, I should say, not necessarily media, monies for those sales. Coming to the next tab, Other Data to Export, that would be our section just below the department sales in the sales by range, specifying gratuities, due rounding, gift certificate sales, received on accounts, paid outs, and sales taxes. Where should that information report in QuickBooks? So, for example, gratuities, debit reconciliation, credit the bank accounts. Do rounding, on the other hand, debit the reconciliation and credit the cash overage or shortage accounts, depending if your do rounding ends up positive or negative, which could be a coin toss every day. Gift certificate sales, on the other hand, debit the reconciliation and credit the gift certificate sold current liability account. Remember, this is a current liability. So I sell a gift certificate. It goes into gift certificate sales, or gift certificate sold, pardon me, as a liability, outstanding liability. Okay. And moving further down, I want to show the sales tax. When I have a sales tax, I should debit my reconciliation. I credit my sales tax liability account. And this is the one time we use our vendor name, and we tell it who our vendor is. Now, this vendor name here must match the vendor that we created over in vendor maintenance earlier. Like I say, it doesn't have to just say Ohio. It could say state treasurer, whatever you're comfortable with. Who you'd be cutting the check to is what it needs to say on there. All right, moving over, we're going to the media to export. Once again, still just moving straight down the sales by range report. We're now in the media breakdown section. And these numbers being exported are from the total column of the sales by range on the far right-hand side. So looking at the first line, we're specifying that when we export our sales, we're taking the total cash and dropping it into the cash bank account, then crediting the reconciliation account. Basically, what we're doing with this reconciliation account is for every debit, we're doing a credit so that reconciliation amounts to 0. So for over here, for everything I sell, I debit reconciliation. Over here, for everything that's paid for, I credit reconciliation, bringing me down to a perfect 0 in the reconciliation account. I hope that may become a little more clear after we do the first import here. Otherwise, we do specify that for MasterCard, go ahead and debit the MasterCard clearing account and credit the reconciliation account. It is important to note that we're not just dropping our credit card media directly into our cash account. The reason for this is that credit card processors tend to take their payment right off of the top of the batch. So, for example, if my MasterCard sales were $1,000, then MasterCard or the processor is going to take their percentage of that $1,000 and then put the remaining balance in your direct deposit bank. So we don't want to just show that we've got $1,000 in the bank from MasterCard, because first off, that takes about 2 to 3 days to get into the bank, and second of all, we're not getting all $1,000. We're getting all but maybe 1 3/4 to 2.5%, depending on prevailing rates. Okay, so we've done that for each credit card media type: MasterCard, Visa, Amex, and Discover. Also, you'll note that we're not dropping gift cards into a bank account. Rather, when a gift card is redeemed, we're taking the money out of the open liability account and then crediting the reconciliation account. This way, our open liabilities is always showing us basically what we have outstanding in gift cards. This current liability should show us what we have outstanding in gift card balances. All right, and coming on down through, you can see each media reflects accordingly with that. House account, of course, going to the house account liability account. Okay, employee tips to export. Now, this is where things get a little trickier. By default, I'm configured this setup that it's a standard operating restaurant. The employees walk home with their cash and their credit card tips paid out to them that day. That's most standard configuration for any restaurant business. If the restaurant does retain all cash tips or all cash and credit card tips and pay them out in paychecks, that requires a little more complicated configuration, and you want to sit with the accountant and do that. I'm sorry, I don't know if I mentioned earlier, but anytime when you're creating this QuickBooks configuration, I strongly recommend that you have the accountant for the business right there with you or dialed into the machine and on the phone with you, going over this information with them. I've had some accountants who can just glance at this interface and they'll plug all the info in for you. are the ones that we work one-on-one, side-by-side, and you get it configured. Okay, so going through the employee tip scenario, like I say, in this case, what we're looking at is that the employees walk home with all their tips, cash and credit card. So what we need to specify is that if an employee got a tip on a credit card transaction, we need to take the money away from the cash that we put into the bank account and credit the credit card clearing account, because that tip's going on the credit card account and it's coming out of our cash essentially to build our adjusted cash line on our sales by range. That is more or less what we're shooting for here. So our cash bank account is balanced to our sales by range adjusted cash, which would be our deposit on the sales by range. Okay, so I've debited and credited these accordingly. If we were to retain house tips, we would want to do something along these lines. Now, this is live customer data, so they don't retain house tips, but we would want to actually debit the cash and credit the MasterCard account and so on. More or less just specifying that the cash account increases by whatever percentage of the credit card tip the house is retaining. For anybody who's not familiar with house tips is the column in the sales by range report labeled SH tips. That means that the business is retaining a percentage of the employee's credit card tip to offset the cost of doing credit card tip through the credit card system. It is legal in most states that I'm aware of. Basically, that employee is using your credit card system to get their tip paid to them. So imagine an employee who has $100 in charge tips. Well, if your charge rate is 2.25%, you're paying them out all $100 for the whole, for those tips, but you're actually collecting from the credit card processor, say about $97.25, or I'm sorry, $97 and some change. You get the idea. Moving along here, last box will be our gratuities to export. This is where we're specifying that if an employee had a cash gratuity, that we need to debit the cash out so that our adjusted cash balances, and also make sure that the bank account reflects accordingly. The reason we're doing this is that the cash gratuity is given to the employee same day. Like I say, employees are taking all tips and gratuities home with them. Okay, so we're debiting our cash gratuities accordingly here. We would want to do the same thing if they accepted credit card gratuities, same there. The difference in gratuity and tip is gratuity is included as part of the sale, tip is after the sale. This is important to remember that gratuity means you're including it in part of the sale. In some states, gratuity might be taxable. That depends on your local law and a lot of other things there. But bottom line, gratuity is put into the sale either through the auto gratuity feature in section table maintenance or applied through the button function on the front end, whereas tip is entered through the enter charge tip button function, or if it's a cash tip, through cash declaration. Okay, so we have this all configured the way we want to configure it. Now, for my export, we're going to export January 2nd sales data, as that's all this database actually has in it to pull through. So I'm going to go ahead and choose my date to export as January 2nd, 2009. It's set to the QuickBooks export directory, and I'll go ahead and tell it, OK, create the export. Now its system is going to tell me to please wait while it generates the IIF file. I'm not entirely sure on this, but I believe the IIF stands for Intuit Information File, but don't quote me on that. Quick Google would let you know what that actually means. Now, when we've completed our export, the system tells us general ledger data has been successfully exported to :/QuickBooks exports /, and this is our file name. The system automatically names our file GL for general ledger, and then the 2-digit month, day, and year .iif. This way, when we go into our QuickBooks exports folder, our most recently created file will always be at the bottom of the list. I always do make a new QuickBooks export folder for each year, so customers who are doing the QuickBooks export, they will create their folder named QB Exports 2008, QB Exports 2009. They'll have separate folders. But like I say, this way, the most recent file is always in the bottom. Okay, so our file is created. I'm going to tell the system OK there. I am going to go ahead and just close the general ledger interface for a moment. Now, normally you wouldn't need to do this, but I've shown you where the file is. I'm going to go ahead and open the file up in Notepad just to show you what data the file contains. These files, although named .iif, behave very similarly to a CSV file format or a tab delimited file format. As you can see, the tab spacing indicates each header column and then your information below. All right, now a lot of this probably looks very confusing as far as what's going on in here, but that's because this is intended for QuickBooks to interpret the data, not for us. All right, we'll close this out for a moment, and we're going to go into our QuickBooks, do File, and we're going to do Utilities, Import, IIF Files. Okay, and we specify which IIF file we want to import. Keep in mind, if QuickBooks was on another machine or in another location, the end user would take the file they just exported and copy it over to the other machine or email it to the accountant, wherever they send it off to, so that they can then import it in the QuickBooks. So we've picked up our file. We tell it to open. And I like to have my chart of accounts up while I import the file so that I can check and make sure everything comes in and balance is okay. Okay, so now we are importing the data, and import has been successfully completed. Now, the way that we know it's been successful, especially on your first few imports, what you want to check for is, does our reconciliation account hit 0? Yes, it does. So that tells us that for everything we debited, we also credited equivalently. The next things I like to glance at, does my cash in the bank account match my cash on the sales by range? 719.63, 719.63, yes it does. Aside from that, I like to go through and also I can skim and look at the credit card accounts, make sure they do match. In fact, they do. If I get this out of the way for us here, we can see that our gift certificates sold is negative $142.55 in liability. Now you may be asking, why is that negative? The reasoning for this being negative is that we had no gift certificates that had been sold in this account prior to our import, but we have gift certificates that have been redeemed. If we look on our sales by range report under Bank GC, we redeemed $142.55. Therefore, our gift certificate redeemed went negative. This account in a real site would never go negative. You cannot redeem more gift cards than you have actually sold, assuming true accounting as well that you're not donating gift cards. So in this case, it had gone negative. Most cases, you would never see a negative number. You know, for example, if I actually had, let's say, $10,000 in gift cards outstanding, then I would have just taken $142.55 off of that $10,000, and my liability would be $142 less. Okay, moving down, we have our sales tax payable, $244. If I look on my sales by range, yes, sales tax matches, so I did well there. And lastly, you see our sales doesn't show us the balance total because it's an actual income or expense account, not like a bank account. So to check the sales and make sure things are coming in okay, I like to go under Reports, to Company and Financial, and run a standard profit and loss report. We pull up our profit and loss report. It simply shows us that we had income of $38.28.39, and then so far we have no expenses, as we haven't paid out payroll, we haven't paid the electric bill, anything else for that matter yet. Now, if you take note, you may notice that the sales by range total sales is $38.16.39, and I'm showing you here $38.28.39. The one difference here is the hash departments on the sales by range report that I distributed. There is a hash department for $12 for the Hudson Women's Club. That's a donation that this local business is doing. So what I'm doing is bringing it into QuickBooks just as a normal sale, and then they're going to pay it back out as an expense. Alternatively, I could have had that single department report somewhere else if I wanted it to. In this case, like I say, it's easier to actually bring it in as a sale, and then when they cut their final check at the end of the month, they'll cut it out as one giant expense check for the donation. All right, so we're going to close our profit and loss report here. Everything came in, and everything looks good, essentially. Now, as a business owner, within 2, maybe 3 days, possibly even next day, if you've got a great credit card processor, our American Express, Discover, MasterCard, and Visa are going to direct deposit our batch monies to us. So when I look on my online bank statement or my paper statement, and I'm going to see a direct deposit from American Express, but it's not going to be for $350. They're going to, like I say, they take their skim right off the top and then give us the remainder. So what I need to do is I need to transfer whatever money got deposited into my cash account from American Express. I need to tell QuickBooks that that money's there. What we can do is we right-click on the Amex account, and we specify transfer funds. Okay, now I'm going to specify that we're transferring from the First Merit American Express clearing account to the First Merit cash account. And if we look on our online statement, let's say, for example, that our online statement shows us that we got a deposit of $325 even. Okay, so we'll go ahead and transfer $325 from Amex to cash, and then I'll tell it save and close. What this does is that takes that $325, removes it from Amex, puts it into my cash account, and now the remaining amount of Amex is my fees. At this point, the restaurant may do it day by day, or they may do it as a month in a whole, but you take that $25, and that's your cost of doing business with American Express, which would be reflected as the merchant account fees, cost of goods sold. So we would make a journal entry in the merchant account fees stating that take money from this Amex account, whatever the balance of the Amex account is, and drop it into the merchant account fees because that was our cost of doing business. Okay, so I'd proceed to do the same thing for Discover, MasterCard, and Visa. Like I say, some businesses will keep up with this day by day as they see their direct deposit go in. Other businesses will do this in a week as a whole. They'll add up all their deposits and drop it in. It depends on how clean and organized they're going to keep their QuickBooks information. All right, so we have brought our QuickBooks in, and everything is set and configured correctly. Everything is balancing, and we have validated that our accounts are uniform. Now, the last things that I want to go over here would be the backups and automation process. Like I said, we've got our actual QuickBooks files being backed up. We have our special folder for the QB exports, and we're dropping our files in there accordingly. Aside from that, if I go under Interfaces, General Ledger, and QuickBooks Interface again, you notice it retained all of my settings that were here before. All the information here, it's a lot to input the first time you create and configure your QuickBooks interface. So you want to be sure that you've got this backed up. A couple of options are to screenshot this information simply by pressing the print screen on the keyboard and then bringing up Microsoft Paint and pasting it in. That works. Or what we can do is, if I go ahead and cancel out of here, I'm going to go into the Windows registry using the regedit command. Under the regedit command, I am going to browse to the H-key local machine, the software, and finally future POS folders. Now under the future POS folder, we have a key entry called QuickBooks General Ledger Interface. This is where all the data for the interface is being stored. Okay, so what I want to do is back this up. I'm going to go to Registry, Export Registry File, give it a file name such as FPOS Settings, and save that off. Yes, I'll go ahead and replace it here. Okay, so I have backed up my QuickBooks interface. What I can do, and just to show you the importance of backing up, I'll delete this registry key. Now if I open my QuickBooks interface, everything is blanked out. It's as if this is the first time I ever opened the interface up. Okay, so bad news. I lost all my settings, right? And how would this occur? This would occur if the server's hard drive crashed or if you had to reload the Windows operating system. So now I've reloaded Windows and I realize, okay, wait, they use the QuickBooks interface here. I need to reconfigure their interface. We could go back to our screenshots and re-input this all one by one. Or alternatively, I can go under my Computer, local disk C, to my QuickBooks backup folder, and there's my FPOS settings file that I had exported. Now hopefully you've exported this, saved it back at your offices or to an external media, something along those lines. A backup on the same hard drive is not a backup by any means. So we find our file, double-click on it. It asks, are we sure we want to add this information? And it's just pointing to that key that we had. We'll say yes. It tells us it's entered successfully. Now, when I come back to my registry, well, there's my key again. It recreated the whole key that I had deleted. All right, and when I pull up my interface, all of my settings are back to how they were. So cannot stress enough. Get your interface working, back up the key. That way, if they change anything, you can revert back. They lose their Windows operating system or the hard drive altogether, you can revert back quickly and easily. All right, so that's step one, is backing up the interface. Step two, common question, can we have the export occur automatically so that the manager doesn't have to come in and do the export day by day? Yes, we can automate that process as well. What we can do is use the Future POS window scheduler. That's your alarm clock in the right-hand corner. I do it very much like I do a automated process for auto report or anything else. I created a scheduled task called QuickBooks General Ledger Export. And if I bring up the properties on this task, you can see I'm pointing it to the QuickBooks executable. Remember, that's the path of the QuickBooks General Ledger executable. Then I put a space and the command line argument QBGL. Now that command line argument is referring to, in the registry, I have created a registry key called QBGL, just like I would if I was doing auto reports. All I need to put in this registry key is the value of run report now equal 1, and it will automatically create and do this export for me then. Okay, so we'll close the registry here. Just to show the example, I'll go ahead and copy this command line, and I'm going to go to my run command and paste it in. This is how I can test that it's working. I paste in my command that's right there, tell it to run, and I see it flicker real fast and disappear. Now if I go to my QB export folder, you see I have a general ledger export for 1/22/09 that was not there before. That was created because that's today's date, and it always defaults to today's date when it's doing the export. Okay. Aside from that, we set our window state to normal, start date, start time, resolution, and resolution minutes, the same as the auto report settings. Something I am experimenting with back here is for the payroll. This site does biweekly payroll, so that means every twice a month I need the payroll to be run for the previous pay period and auto export and dump out into the payroll file. So we're testing this, and I can let you know if that works properly in a month. Okay, aside from the auto export and that type of stuff, last thing I want to cover, because I told you in the email I would even show you what to avoid or what is possibly needs work on the QuickBooks interface, is that if I go, and I'm going to go back to exporting the second, and I am going to do restore my company, meaning put it back to an empty company again. We're just going to revert back to where we first started here. Okay, so I'm going ahead and restoring back to where I started, bringing all my account balances to 0 here. Now, when you restore from a backup, QuickBooks asks you to physically type yes, just to be sure you know what you're doing there. Like I say, the reason you'd restore from a backup is you did an import and made a mistake, or possibly, once again, they lost their drive and they need to restore from the backup and actually reload their QuickBooks. Okay, our data is restored, and we should come back up to an empty company, more or less. Yep, all 0 bank accounts here. A nice reminder that I've got to get my W-2s out to my employees for the end of year. Okay, so we're going to go to Chart of Accounts again. Our Chart of Accounts is empty. Now, what I wanted to show is if I enable the Direct Connect XML, now bear with me when I run this, as it through the screen recording and the XML interface, it runs a little slow. So bear with me while it runs, but we'll go ahead and do the XML. What is important to note when you use the XML interface is that QuickBooks must be installed on the same computer and must be open and running for the XML interface to work. So you could configure your Windows scheduler to automatically run QuickBooks at, say, 3:55 a.m., then to automatically run the XML interface at 4 a.m., and have it auto-drop the data in. I personally wouldn't recommend that. If you're going to do the XML Direct Connect, have the user manually at least click the OK button and make sure that everything goes in properly. I'm just one for management accountability that I feel you automate too much and you leave room for an error to progress for months on end. Then you're trying to clean up a lot more than if they catch it the same day. Okay, so like I say, what you can see here is it is working on the XML import. Like I said, it's a little slow on this machine right now because of the screen recording, and this obviously is not a beefy machine. This is actually a 2-year-old computer still running 512 RAM. Okay, so it's telling us QuickBooks did not return errors. That's the good news. The bad news is, and Cutting Edge has been made aware of this, that when I use the XML Direct Connect, something got reversed in the code, and instead of everything coming in the way it should, every single number got inverted. So my bank accounts are negative, my gift certificate liability that should be negative is positive, and the reason for that is just that the XML interface has completely reversed these two fields. Cutting Edge is aware of that, and I'm sure you'll see a fix for it soon enough. All right, at this point, I want to go ahead and unmute all members, and we will open everything up to chat. And feel free to ask me any questions before we move on to the payroll.
Unmuted.
Good afternoon, everybody. Now that you guys are free to speak, what can I answer for you?
Well, I'll start. You usually have the account set up as chart of accounts for you.
Most times, yes, certainly. I will not go out and do an interface without having the accountant either on site or on the phone with me. I mean, their job is QuickBooks. We're just there to make the interface work. Like I said in my email, I am by no means an accountant. Just through experience, I've learned this is the standardized setup.
Okay. And the other thing is, I mean, do you charge, there must be an extra fee that you charge for setting up the interface?
What we do with our clients is our clients are either under a maintenance agreement for software and hardware support, maybe just a software maintenance agreement, or they're straight out billable. So if they want help with QuickBooks, they're either under maintenance, we'll help them for free, or they are billable and they're going to pay for us to come out or be on the phone with them to help them. If it's a brand new installation, we just put the time needed for the QuickBooks installation against their PDIP that we originally sold. That's going to be something to kind of handle your own business. Other questions? Don't everybody go at once. Anybody else have questions? Okay, honestly, if there's no more questions, I will go ahead and move forward to the actual central ledger the payroll interface side of things, and answer any questions after that part then. All right. Before I put everybody back on mute, does anybody have anything they need to say? No? Okay. Well, I'm going to go ahead and mute everybody again, and we're going to flip to the payroll side of things.
Muted.
All righty. Everybody's back on mute. Let me go ahead and cancel out of my general ledger interface. Once again, I'm going to restore my QuickBooks just to get rid of these negative dollar amount accounts. So I'm going to do Open Restore Company, Restore from Backup, Local Backup, and tell it to go back to my original file. All right, and just overwriting my future POS diner. And yes, I'm sure. Okay, now it is important to mention that while this restores, the payroll interface for future POS and QuickBooks, what we're basically responsible for on the future POS side of things is we take the hours worked and the job code they worked in, output that data to QuickBooks in a format that QuickBooks is able to take the data in, enter it onto the weekly timesheet. From there, QuickBooks uses its pay rate information as well as withholdings, deductions, etc., to create the physical paycheck. Future POS, we are simply, imagine the time card file. We're simply dumping the hours worked, job code, and employee info out and importing it into QuickBooks. Okay, so our data has been restored successfully. In the back office here, I am going to go under Interfaces, and we're going to do the payroll interface and choose the QuickBooks payroll interface. Okay, now first off, I'm sorry, once again, QuickBooks is reminding me I need to get those W-2s out to the employees. All right, so what I want to do is do a quick lesson on QuickBooks as well. Under our Employee Center, we have our list of employees, fairly straightforward. I've got one employee that we're using for this example. Name is Kelly A. Bucket. If I double-click on her, I can see her information. The important information is first name, middle initial, last name. Everything else is optional. Social, gender, date of birth, great Rolodex info to have for QuickBooks, especially if you're doing the actual paycheck. You're going to want her social in there for the W-2. Address info, all that same way. Important note, account number, employee ID, this does not have to match future POS. We don't use this account employee ID for anything. Billing rate level, we also do not use. Okay. Now, under Kelly Bucket, what we do need to do is pull down and look at her payroll compensation info. This is where we specify how Kelly is paid in QuickBooks, that payroll is biweekly, and we told it biweekly by creating a payroll schedule. Aside from creating the payroll schedule, which once again the accountant probably would do this for you, but it's very easy to walk through. The restaurant owner could probably even figure that out themselves. The next things we do is create their earnings and what their rate is for that earnings schedule. So if Kelly works multiple job codes, what we would create is comparing the QuickBooks interface here to her earnings schedule here. So as a server, we call the hours regular hours and the overtime hours. Maybe as a bartender, we call them bar regular and bar overtime if she ever does bartending. So what I would do to create new ones over in the pay rate info is copy the bar regular, and I'm going to go to pull down here and choose Add New, Hourly Wages, Regular Pay, and we'll call it Bar Regular, Payroll Expense, Finish. Now I'll specify, let's say that as a bartender she's actually making $6.55. All right, so our she is now making $6.55 in QuickBooks. We are ready to go here. We want to check mark the use time data to create paychecks. This is what actually specifies to use the time card info we import and multiply it by their pay rate to create their time card or to create their paycheck. Aside from this we would also create any additions, deductions, company contributions if your restaurant's large enough to have some sort of a IRA plan or anything like that. Also throughout here, when I say okay, didn't prompt me this time. When you create a new employee, it is going to prompt you and ask you to fill in your tax information, the allowances, withholdings, state tax information, etc. All things the accountant should help you with. To be honest, I wouldn't know where to begin here myself. It's where the accountant needs to help you on it. It is important to mention before we even try to import the payroll that while QuickBooks will advertise on their box right at the store that, cut checks right from payroll or QuickBooks, do payroll right through QuickBooks, there is a fee associated with doing the QuickBooks payroll. One of our morning session members pointed out, I believe the fee listed on the website is something like $21 a month for unlimited employees or $10 a month for 1 to 3 employees. Most restaurants have more than 3 employees, so you're looking at $21 a month to be able to download what is necessary to do the payroll interface. What we're doing as Future POS, we export the time card data, get it into QuickBooks. QuickBooks then needs to actually cut the paycheck and figure the Social Security, federal withholdings, and all of that good information. That's what you're paying the $21 a month for, is the withholdings and paycheck printing parts. All right, so we've got our employee created here. Next thing, when I look at my interface, I see this is the file it's creating. Once again, I'm pointing it to an actual path that we've made. And unlike the general ledger, the payroll gets a static file name called payroll.iif. The next information that it wants is the company create time. Now, this company create time is what QuickBooks uses to integrate to Future POS to identify that what we're bringing in is actual time card data, not bank account info or sales info, anything like that. QuickBooks has a feature called Timer Activities. Timer Activities is just that, the time card basically. Now this is not an arbitrary number that we get to just plug in and call done. QuickBooks creates a unique company create time number for each QuickBooks company that you create, meaning that, for example, our QuickBooks company here is called Future POS Diner, and we have a unique company create time for that diner. If I open a second Future POS Diner down the road and create a new QuickBooks company, I have a new company create time number. Now, what we need to find out is to make the interface work, we need to know what our company create time is. In this case, I've got it punched in here, but how we found it is by going in QuickBooks to File, Utilities, Export, and Timer List. Okay, so File, Utilities, Export, Timer List. Okay, and we get a nice splash screen here from QuickBooks. Don't know what it means, don't need it, don't care. We say OK, pass. And it's asking me where would I like to save my file. I'm going to just name it temp and save it right to the desktop. We don't need this file for very long. It's not a permanent file. We're just dropping it out for a moment here. We're going to go down to the desktop. And you see here is my temporary file. Now I'm going to go ahead and open it up and open it in Notepad. We'll say OK. Just like we opened our IIF file before in Notepad, we're opening this one up. And under the time header information, we can see we've got all these column headers again. Well, here's a column header that's called Company Create Time. This is exactly what we were looking for. And if we look just a little offset to the Company Create Time, there's our Company Create Time number. So we highlight, copy that, and bring it into our QuickBooks interface. Okay, so that's how our system knows that's the company create time timer. Okay, I'll go ahead and close out of the temp file. I can delete the temp file. That's all I needed it for. Just one time, get that info out, and I'm done with it. All right, we've got our company create time. We specify what pay period we want to do payroll for, and we'll say previous. We've already configured our hours, regular and overtime. That's where we were doing our pay rate and compensation info per employee. Now, it is important to mention in QuickBooks, I do not have to have the employees pre-made in QuickBooks. The Future POS system, when you export and import into QuickBooks, QuickBooks will create the employee. But what you do need to link manually is the payroll compensation info. These fields must be linked manually. We will bring in the actual employee's name info for you, though. Just the name, not the address, the social, any of that good stuff. Okay, secondary, you notice I have skipped to the tips info section for the moment, as well as the meal info. To be honest, the meal info, I don't know of anybody who uses it, and I haven't exported myself to train you on it. The tips info currently is not working in the correct manner. We'll go over why it's not working in just a moment. So right now we're dumping out just the time card data. All right, so time card data, I'm not going to use the direct connection for this example. We'll create our IIF file, and rather than do all employees just for speed, we're going to go ahead and just do Kelly Bucket again. So I'll say OK here. The system is going to tell me payroll has been successfully exported. Specify OK. And now I'll come over to QuickBooks, go to File, choose Utilities, Import, and instead of IIF, I know that we just saved that out as an IIF file, but we need to import it as a timer activity. The timer activity is what links it to payroll. Once again, we get our splash screen, and now I point it to my payroll file, payroll.iif. Open that up. QuickBooks will give you a warning that the accountant is probably going to call you on 2 or 3 times. What this is saying is the import file was created by an old version of the QuickBooks Pro Timer. It's recommended that we upgrade to the newer versions, etc., etc. The reason for this is backwards compatibility. Future POS has had the ability to interface to QuickBooks all the way back, as far as I know, to the QuickBooks Pro 99 version. I have tested it on that. It did work. And what we're using is the same column header info that QuickBooks 99 looked at, and so the new versions of QuickBooks are notifying us, hey, these are the old header files. They'll still work, but you should probably look at fixing your interface. The interface works just fine. We're backwards compatible and don't have to have any extra checkboxes, so it's staying the way it is for the time being. We're going to go ahead and click OK to import here. Like I say, your accountant's going to call you on that several times over. Now the system tells us that our data imported successfully. We imported one activity. I'll view report here, and I can see here that Kelly Bucket has regular hours, and let me get this out of our way. All right. And that on the 7th, she worked 6 hours, 22 minutes. All right, so her payroll interfaced okay. The other way that I can validate this is to close out of the import timer detail report, close out of the data import successfully message, just look at the employee center and go to my enter time and use weekly timesheet. Now I will scroll through previous weeks until I get to the week of the 7th, and I can see her payroll item is regular, notes were server, and we logged 6 hours, 22 minutes for her on Wednesday the 7th. All right, now paycheck time comes due. The customer simply goes to employees, payroll, and rather than showing learn or enter product service key, they would have a payroll option here. This is where you pay for the payroll, $21 a month, and it downloads all the necessary stuff to cut, print the paycheck, take out the withholdings, etc. All right, now backtracking just a bit. So we did our interface. The interface worked just fine. As I mentioned previously, the tips info to export currently does not work the way that it needs to work. It works, just not the way it needs to. What we're currently doing is if you export your tip information, it is going to export their tips declared as a timer activity, meaning that if as a server for the 2-week period, maybe I claimed a total of $500 in tips. Rather than coming into QuickBooks as $500 tips declared, it comes into QuickBooks as 500 hours worked at a $1 an hour pay rate, and then wants me to pay it back out on paycheck. So the export of tip works if you are, in fact, exporting your tip information, or I'm sorry, if you are, as a business, holding the employee's tips and paying them out in the actual paycheck. But very few businesses operate that way. Furthermore, and I have